Hello traders, welcome back to another episode of Chat Insights on Probity Trades YouTube channel. Welcome existing subscribers, and if this is your first time coming across this channel, you are welcome to Probity Trades. This is a segment of our YouTube channel that we share chat insights of trading opportunities and what to expect on the forex markets. So let's get right into it. But before we do that, if you are yet to subscribe, you want to do yourself a lot of favor by subscribing to this channel. There are two things you are actually doing. You are helping this channel to grow, and also you are doing yourself a very good favor by not missing out on trading opportunities that will be shared on this channel. So let's get started. I know that for some couple of weeks now, we all will have been seeing some erratic price action movements in the market, which price has not been stable for a while. This is due to the fact of US dollar not having a clear direction. One thing about the forex market is that once the US dollar is not really having a clear direction, all other markets is going to be moving sideways. Only safe haven currency will only gain momentum in this period, and that is currently what we are seeing on my chart on gold. Gold, these movements, the market has really been in an impulse move. You will see the price did not even make any major pullback for trade entry. Those who might have gotten on this trade will have been those who have entered earlier or scalping their way through to the top. But entering this kind of trade is very, very difficult and very, very risky. So I would not advise such. I was actually expecting. I spot these chart patterns. I think I did share this video about. If you check about 3 videos or 4 videos back on this um, episode, you will note that I expect that price should break to the upside and then expecting a retracement for us to go up. I was calling this point that next target on gold is 4,200, but now price has moved without us in it. It is very, very painful. This trade will have been a absolute banger. This trade will have passed so many prop accounts, will have print so many withdrawals in our live account trade. But it is what it is. There's nothing we can do about missing trades. There's nothing we can do. We cannot join this trade now. It's already at its peak. So we just have to let it go and then reposition ourselves as to what price is going to do next. So as of now, as I'm speaking now, there's nothing I'm looking out on gold. Even if you should scale down to the 4 hour time frame, it is very, very difficult for you to be taking a buy trade now. Price is currently high, so you still want to wait for some bit of retracement. That is, if that can even come. This is the 4 hour trend. If price can come to trend line, yes, you can look for a way to trade buy. But if price is not retracing and just keep going up, don't say you want to join. That is FOMO. That is FOMO um, that is getting the best of you, fear of missing out. So it's best to just miss out, just miss it. Yes, we reposition ourselves on another trade. Okay, so let's look at the major pair. Today we'll be looking at a whole lot of pairs. Why? Because the market is not really giving a clear direction. So I want to share uh, each of these currency pair, what to expect and how to position ourselves. It's going to really take a lot of patience before we actually take trades on most of these pairs. So let's start. We'll be looking at the major currency pair because that's what I majorly focused on, and then the indices. So let's start again from the monthly charts to have an overview of what is really going on. GBP USD, my last episode on this channel, I was expecting a downward movement, but now because of the USD crisis, especially the shutdown of government in the United States, has caused so much havoc on the currency pair. Yes, This has really caused a loss. The forex markets, unstable price movements. 1 minute you see that the dollar has gained strength, the other minute you see that it has lost strength. So market has really been moving in a choppy way. And in this kind of period, the best thing to do is just to stay out of the market and wait until the market comes clear. If you really want to save that your account, really want to save that your money, don't force trade. Wait until things are clear to you before you take your decision. So what I have here is GBP USD downtrend. You have my levels plotted, simple and meaningful. So we have this minor level that price has taken now, price retest it, and I was expecting that price should keep moving higher. I'm expecting that price should keep moving higher. If price is going to keep moving higher, okay, first thing first, before we go here, I really want to really make enough explanation on this. So probably this video might be quite lengthy. So let's check DXY. DXY is used to measure the strength of the dollar. So let's check DXY and let's see what is happening here. This is my DXY chart and I'm seeing a bullish channel. You can see that whenever price comes to the lower channel, we are pushing to the upside. Price is pushing to the upside. We are pushing to the upside. And now we are trading below this point again. So this is with this now I'm expecting a rise on DXY back to this upper channel, because you see that whenever we push, we are pushing back to the upper channel. So with this is telling me that we should expect some strength on USD. Price has been down, the USD has really been down, but from this point now is telling us that we should expect some strength on USD. But if we move closer to see the price action right here, I'm seeing a possible double bottom, but price has really been struggling for weeks. You can see series of dojis candlestick that we have here, and then we have this first bottom. This is the second bottom. Price is yet to fully form these chart patterns. We are still in the second leg process, so I'm expecting some bullish movement if that is going to come. So if that is going to come, what this means to currencies that USD happens to be their code currency is that we will expect a drop. The likes of GBP USD, Euro USD, AUD USD, SZD USD, the likes that USD happens to be their code currency, we should expect a drop. And currency that USD are the base currency, we should expect a rise if we have this market starts pushing to the upside. This should push up. This is the reason why I'm expecting some strength on the US dollar. However, because of the current government issue we are having in United States, does not really make the strength to be that clear. You will see that today, this is this week candlestick, we've actually surged up, telling us that in the morning dollars gain some strength, but now before you know it, price is pushing down. And if you look at previous week, that is how price has really been moving. So this will make it difficult for price to actually move in a particular direction where we have a lot of ranging market. So with this, based on what I'm seeing here, this trend is still telling me bullish. So of course, I still expect some strength on USD. I still expect some strength on USD. So now let's go back to our currency pair. So this will clear this minor level, price break and retest. This is just a simple price action trading strategy. Break, retest. We're supposed to push higher, price push up, and then we have something like this. If we have something like this is telling us that price is struggling to keep pushing to the upside, and we are having price creating lower high here. So if price struggles to create lower high here, that is telling us one thing, that the market wants to start going bearish. If the market wants to go bearish, we need to see price to pull down a lower low. But here we are still struggling at this minor support. Price is still struggling at this minor support. If we are able to clear below, I repeat, if we are able to clear below GBP USD, we have no reason than to drop heavily. Yes, we have no reason than to drop heavily. But since price is still, moving slow here and there, we still want to have patience. Day charts, if we move down to day charts, look at what we have here. We have series of price action chart patterns that has been contradicting. Yes, this is what usually happens when we are in a choppy market. And once you are able to identify that this is a choppy market, the best thing to do is just to stay out of that market until the market moves clear. Let me show you something. We have what here? Head and shoulder pattern, which says that price want to go down. Okay, and then the next minute, what do we have? We have inverted head and shoulder, telling us that price want to go up. The next minute, what do we have? We are having now a possible head and shoulder pattern again, that is telling us that price is most likely to move to the downside. What we are currently seeing on GBP USD is called a choppy market structure. This is not ranging. Ranging is very clear to note, but this here is what we call a choppy market structure, and it's very difficult for you to make money. 1 minute price is bullish, the other it is bearish, the next second is bullish. So it's very difficult. We have a lot of break even hit, stop loss hit, your trading profit hit, and the likes. So for me here, it's kind of 50-50 now. But because of what DXY is showing me, I'm leaning to the bearish side of the market. So if I bring, let me just mark another minor level like this. So to complete this head and shoulder that we have here, I'm expecting price to pull up. To complete this head and shoulder, if we have rejection from here and price eventually come again, we have this, then I can tell you that price is going to go down. But as a trader, you should always have a contingency plan. If this does not play out, what am I going to be doing? It means I'm just going to change my bias to bullish, and we expect the market to push to the upside, retrace, and then I will go long. Simple as that. But for now, I'm more bearish than bullish. So let's say 60% bearish, then 40% bullish, because of what I'm seeing on DXY. If I'm not seeing anything on DXY, I would just simply be 50-50 on this GBP USD. So that is that on GBP USD. Let's move down to Euro USD. Euro USD, let me take off this. Let's take off this, and also let's start from the monthly chart. Monthly chart, we have similar charts on GBP USD. If you don't know, both are positively correlated. If you don't know what correlation is, you can just search around and watch what currency correlations means. So this year we are having this minor push to the downside. Overall trend on both EU and GU are bearish. Yes, overall trend, they are bearish, but we have these bullish movements which look like retracement. From couple of videos back, I've been expecting price to just pull back to this major resistance before we have another surge to the downside. But similar thing, we are having price clustering around this point. If we mark this level, this high, you will see this is what traders will call liquidity sweep, but in my own simple price action terms, it is called false breakout. That is, we price move as if we are breaking out of that level and we are anticipating that push to this point. Then what happened? We close back right inside, telling us that this is a false breakout and price is most likely to go down. Whenever price swept or swept liquidity, or whenever we have a false breakout, price usually moved really well to the downside. So if you move down to the weekly chart, now the weekly chart tells us a lot with candlestick formation that are forming. You will see that the candlestick are having so much wicks, on the downside, telling us that price really struggle so well to push downward, but buyers are also standing in gap. This is because the USD is not really having a clear direction. That is why we are having this kind of price action. Today as well, price has already tanked downward. What happened again? We push back inside. Let me take off this trend line. So look at what we are having on the weekly chart. Even with this weekly chart, the best thing to just do is just to stay out of this market. The trend is not clear and you don't want to be in unnecessary trades. So it's just better to just stay out of the market and just keep watching until things are clear. If we move down to daily chart, look at what we are having. Choppy, very, very choppy. It will be very, very difficult for you to trade. I was one time in a buy trade. I changed my decision to sell, and look at what the market has just been doing. It is choppy. Best thing, stay out of the market and wait until things are clear. How will I join this trade again? How will I join this trade again? This is what I'm just simply going to do. I'm going to wait. No matter how long, it's just best to just save your account from unnecessary losses than taking trades that are not so clear. I love to trade when direction is clear because this gives me more peace of mind, more clarity. I will have more confidence on my trade rather than this kind of structure in the market. Yes, the trend here is still looking very bullish, but what we are having right here is not something to write home about. So I don't like this. Currently now on Euro USD, this is not even looking so clear. It's not really giving me any chart patterns, trend movement. Okay, I think I'm seeing a particular chart pattern right here. Let's look at this chart pattern. If I just do it like this is a rising wedge chart pattern signaling that the uptrend is getting exhausted and it's most likely we have a bearish trend. If we break below, especially this blue bar, if we break below, just like the concept we have on GBP USD, and we expect the markets to go bearish. But if we break above, it means that this trend still want to continue. I will wait for a retest and then a continuation movement to the upside. The best thing to do now is just to watch. We are spectators now on GBP USD and AUD Euro USD. Next one is AUD USD. AUD USD, I shared this in my last episode that I'm seeing a bearish chart pattern on the monthly charts, which is a descending triangle. This is signaling a sell movement. And for those who have tutored, I've taught them about a wave count which is called the X to E wave. This is X A B C D, X A B C D E. The E waves is where we can take our trade from. So I'm expecting a downward movement on AUD USD to the downside. That is why I have this blue bar right here. But before this blue bar, we may come here first and then here second. Once these two levels has totally taken out, I'm expecting the market to move downwards to this point. So AUD USD, I'm still bearish. I'm still bearish on AUD USD. If you look at the weekly chart, the market too is not really moving well on the weekly time frame. So the best thing to do here is, like, on my day charts, what I can just simply do is to just mark a counter trend line like this. I would like to mark a counter trend line like this. Let's see. Okay, let me just adjust it like this. Okay, I think this is better. So if firstly we have reaction from this level, if price get back to this trend line and we rejected from here, I may start looking for short opportunity from there, and then I'll be looking to add to my position if we finally break this trend line. So something like this, a little bit of retrace, then this is our first level target, second level target, and that is what I'm seeing on AUD USD. Moving on, NZD USD, this is even more clearer than that of AUD USD. On the monthly chart, the market is bearish. You can see very bearish, and even if I should trace the price action for you, you will see, you will see this low, lower high, higher low. We're supposed to change this market trend to the bullish movement, but we still struggle and bounce between this region. We eventually break through, we did some deeper retest, and then we expect a continuational movement to the downside. And even on this monthly chart, if you try to bring out our fee from this swing high to swing low, we'll see that this point is really coinciding with the golden level of Fibonacci zone, telling us that we should still expect some downward movement on NZD USD. NZD USD and bearish here. Weekly chart price has been able to close below this support level. Now we are expecting a retest to turn to resistance, so I'm expecting some deeper retracement. On the day chart, you can see price is retracing, and price might retrace deeper, because one thing I've noticed is that whenever we have a smaller break of structure like this, you can see this break compare to this low, price usually retraced more inside. Look at what happened here previously. We have this small breakout, price retested back to the high. This one here, it is small, price retested deeper. So I'm not really expecting this point to hold. I will expect the market to still do some kind of little retest, probably maybe to fill this kind of imbalance that we have here. And that as well, the Fibonacci level can just help us to point that out. You can see coinciding very well with the 618 Fibonacci level. So I'll be expecting price to push back all the way to this point. I'll be entering my trade like so, and then my level target is going to be below this point. So this is how I'm going to be positioning myself on NZD USD. USD card. I hope you guys are enjoying this episode. If you are, just make sure you hit the like button, subscribe if you haven't done so. Let's continue. NZD USD, starting from the monthly chart. USD card. Don't mind me. I'm already getting so much attachment to NZD USD. NZD USD monthly chart, levels plotted, key levels here and there, price rejecting from this point, and from here, this resistance, what I was expecting initially was that this point to just keep bouncing here, just like what you have been seeing previously. I'm expecting this point to bounce price to this lower point, but along the way, price did form a chart patterns of ascending order, indicating a bullish continuation movement, and price is trying to push higher, which now we have closed which now we have closed above. Let me take some water. Come on, yeah. All right, which now we have closed above that's minor resistance level, which is representing the upper point of that ascending triangle. So let me just take this off. Let me take this off as well. So this is the ascending triangle. If you look at this is looking like what we saw before on the chart of gold, but gold did not retrace. It just keep going higher, higher, and higher. So this is what we have here. If you are looking at the X to E wave pattern, this is X, A, B, C, D, E, and the E is where the surge happens. So price retrace back deeper inside of this level, and then price is trying to continue to push to the upside. So I'm looking for a straightforward buy movement on USD card. So we'll be able to close above. I'm expecting retracements. You can see how price is moving too. It's very, very slow. Current price movement is kind of frustrating, but then we just have to wait. So I'm waiting for price to retrace. I will wait for price to just retrace. So on the 4-hour time frame, if price retrace, I'll look for a way to just mark my counter trend line. Upon the break, I'll be looking to get in on long opportunity on USD card. So that's just very Straightforward on USD card, USD CHF. I'm bullish here too. I'm bullish here. USD CHF, we have just gotten to a major support level that has been holding from 2011. Price tested it and rejected massively. You can see this pin bar candle formation that was formed last month, which showed that we have massive rejection from this point. And if you look at the weekly chart, it's also showing us a possible reversal chart pattern of double bottom. But before this double bottom is fully formed, we need to clear this level. So getting in on this trade is more of like an aggressive entry. So I have another factors that can make me enter into this trade. So I'm having a flag pattern. This flag pattern is a bullish flag pattern and it is formed in a downward movement. It is signaling to me that we may have a push to the upside. So I'll be looking for long opportunity on USD CHF. Even if I should delete this is looking like a counter trend line to me. So when we have a strong candlestick close above, it's telling me that momentum has come into the market, and I'll be looking to go long on that on this USD CHF. Even if we look here, I'm already seeing chart patterns. One of my key criteria that I love to see if I want to enter a trade, number one is the counter trend line break, and number two is chart patterns. This is my major criteria. So I'm seeing a possible inverse head and shoulder here. So if this should lead to the break, I will have so much confidence on this trade that we are heading to this neckline, a possible neckline on the double bottom chart pattern. So price can still struggle this week. Sincerely speaking, price can still struggle this week. I will just be waiting. I will sit on my hands and make the week a productive one by you know, reading and studying the charts. So I'll be waiting for us to have something like this. I'll be looking to enter like this rather. So this is what I'll be looking for on USD CHF. USD JPY, lastly, USD JPY. You can see, look at what we have here. Even before we go to the lower time frame, price action is really messy, really messy. Even scalpers will still struggle to make money in this kind of trade. If you are not quick enough, trust me, you are still going to lose. Monthly chart, market bullish. Then we have some bearish incoming. Then also we are seeing that this level is very strong holding price. We have a possible head and shoulder pattern here, supposed to lead to a crash of USD JPY. But what happened? Price is looking like we are invalidating this level, and you can see how the bulls has been taking this market to the upside. The bulls has really been taking the market to the upside. If we look at this monthly candlestick that is forming this month alone, that is where we have this bullish hammer candlestick, and we are just 6 days into the month, and we're already having this surge to the upside. If this candlestick closes bullish, indicating a morning star candle formation on the monthly chart, and this is one of my favorite candlestick, I will expect more bullish movement to come in. So the dollar is still most likely to gain some strength in weeks to come. So it's just best to just wait, exercise patience, and before we actually take opportunity. So if we narrow down to the weekly time frame, you can see previous week market has been in. It will be very difficult for you to make money here. If you don't have your stop loss hit, you will have your break even hit, you will have your trailing profit hit. Even if you are targeting 1:2, 1:3, price will not get to your take profit before it reverses, unless you are very quick. Then you close out at some meaningful profit target. So this year is going to be a very frustrating weeks. Now we have price broken above. We have price broken above this level. This is telling us that USD has started to gain some strength even over JPY. So we have a break here. simply wait for the retest. One thing is certain, and whenever we have a gap in the market, most of the time price will retrace back to fill this gap before it continue a direction. So I will be patiently waiting for price to retrace. This may take some days, it might even take the whole of this week. It's just best to just sit on your hands, knowing when not to trade. It's as good as knowing when to trade. So I will sit on my hands, wait for price to retrace to fill this gap probably before we look for long continuation. I'm bullish on USD JPY. So nevertheless, my bias can change depending on what the market starts showing me. You will see that as I'm explaining, I'm also showing you my contingency plan if price fails to go in a proper direction that I'm anticipating them to go. So that is what I'm expecting on this major currency pair. So let me just also show you some bit of index. On NAS 100, the market has really been bullish, even though it is slow. It's not a right moment to trade it now. I'm waiting for retracement, and S&P 500 as well. I'm waiting for retracement. I did take some opportunity, I think somewhere around here on S&P 500 some times ago. I shared them also here. You can check back on my previous episode, you will see that there. Now, one of the trade that was very painful for me is this Japan 225. You will know that in fact, about 2 episodes consecutively, I was sharing this opportunity. Yes, I did make profit from it, but not so much as I've expected to make. I spotted this chart pattern. I enter at the breakout of this chart pattern. I'm expecting this next level target. I close out my profit somewhere here when I start seeing price starts to reject. So we have this retracement. I was expecting price to retrace here so that I can rejoin the market again. This is the painful part of this trade. I close out my position here. Then I was expecting that, okay, when we have that retracement here, then I also have my Fibonacci lineup that, okay, probably we can test my Fibonacci. You can see my Fibonacci is in line with this level. I'm expecting price to retrace here so that I can join the trade again. But price never come to my point, and look at it, we just match my targeted level on Japan 225. There's nothing we can do to missing trade. It's always painful, but then you reposition yourself for the next opportunity. So that being said, lastly, let's just look at US30. This one is the most sluggish of them all for the past weeks. US30 has really been slow. I'm bullish, but I want a surge to the upside. Then let's have a retracement, and US30 will be going to the next level target, 54,000 on US30. So that is that on Chart Insight of this week episode. So let's keep watching. Once we have suitable trading opportunity, I'm going to share that on our Telegram channel. If you are not there, you may want to check our bio and click the link there. It will lead you to Probity Trades Telegram channel. It is absolutely free. We share our trading entry criteria and some other things that we can benefit from on the Telegram channel. That is it for this week. I will see you in the next one. Peace.